Richard Loyson from Loyson Consulting. With the tax season that's about to open up, the first filing date is 1 July, which is today's date. I thought that it would be appropriate just for us to reflect on who exactly is required to submit an income tax return. SARS has published this gazette, Government Gazette, which I'll be going through on the 9th of June 2017, specifying who is required to submit an income tax return for the 2017 year of assessment. I'd just like to point out, I've had the privilege of traveling countrywide and delivering tax updates and tax technical material, and I often get asked the question, am I required to submit a return or not? And it's quite important that we know who is required to submit a return for two reasons. Number one is that there's significant tax administration penalties that have kicked in, that SARS will levy a penalty for the non-submission of an income tax return, where you are required to submit a return but you have failed to submit a return. The other scenario that often comes up is where we've got South African residents who earn below the threshold, which I'll discuss shortly, but they have foreign assets. And according to the 2017 Gazette, if you've got foreign assets in excess of 225,000 Rand, you are required, in terms of this Gazette, to submit a return. Failure to submit and declare those offshore assets in the return will lead to penalties based in terms of the Tax Administration Act. Alright, so if we have a look at who is required to submit a return in terms of the Gazette, it's every company, trust or other juristic person which is a resident. It's also every company, trust or other jurisdiction person which is not a resident, and which carried on trade through a permanent establishment in the Republic, which derived income from a source in the Republic, or which derived any capital gain or loss from the disposal of an asset to which the 8th schedule applies. Also, every company incorporated, established or formed in SA, but is a non-resident due to the application of a DTA. That is specifically looking at the application of the term place of effective management. So if your place of effective management is outside, but you've incorporated in SA, you still need to submit a return to revenue. Alright, with respect to natural persons, every natural person who is a resident and carried on any trade other than in the capacity as an employee is required to submit a return. Also, if the natural person is a non-resident and he carried on trade other than in his capacity as an employee in South Africa, he's also required to submit a return. So the main issue here is there that as soon as you're carrying on a trade, so in other words, you're not incorporated as a company, you're trading as a sole trader, there is a direct requirement, regardless of limitations, to submit a return. It also applies to every natural person who was paid an allowance or advance, and this is in terms of Section 8 of the Income Tax Act, excluding reimbursements or an advance, and the gross income exceeded 75,000 Rand if the taxpayer is under the age of 65. I'm going to explain the limitations with regards to the 75,000 Rand, but if we just look at the travel allowance, so that if you're receiving a travel allowance, if you're receiving a cell phone allowance, an entertainment allowance, that all falls under this category. Also, if you were granted the right of use of any company vehicle in terms of the 7th schedule and the gross income exceeded 75,000 Rand, if the taxpayer was under 65, you would also be required to submit a return. Alright, also, if we are dealing with a resident and that resident had capital gains or losses exceeding 40,000 Rand. And the reason why it's 40,000 Rand, because that is currently your capital gains tax exclusion, annual exclusion. Is not a resident and had capital gains or capital losses from the disposal of an asset to which the 8th schedule applies. Is a resident and hold any funds in foreign currency or owned assets outside of South Africa if the value of those assets exceed 225,000 Rand at any stage of the 2017 financial year. Now clearly it's the Rand equivalent, so if you've got investment in dollars in an offshore account, we need to translate that into Rands to determine what the market value is, and if that number is above the 225,000 Rand, we need to submit a return and declare those funds. Is a resident and to whom any income or capital gains from funds in foreign currency or assets outside South Africa could be attributed back to the taxpayer. And is a resident and hold shares in a CFC, and a CFC is a controlled foreign company. So if you own shares in a foreign company, then you as the shareholder, which is a resident, will need to submit a return to SARS. If SARS has issued a return, then you will be required to submit that return, subject to below, which I'm going to discuss in the next slide. At the end of the tax year, the taxpayer was under the age of 65 and whose gross income exceeded 75,000 Rand. The logic why it's 75,000 Rand is that's the threshold in which you start paying tax. So if we take the primary rebate for the 2017 tax year, which is 13,500, if we divide that by 0.18, which is your 18%, which is your minimum tax rate, we get to 75,000 Rand. Likewise, if it's between 65 and 75 and whose gross income exceeded 116,150, in other words, the taxpayer who's under 75 but more than 65 years of age is entitled to both a primary and secondary rebate. And if you're more than 75, gross income exceeding 129,850. Also subject to below, every estate of a deceased person that had gross income. Every non-resident whose gross income included interest from a source of South Africa to which 10(1)H does not apply. So the logic behind 10(1)H, that's your interest exemption for non-residents. If that 10(1)H criteria has failed and that interest is not exempt, you need to submit a return to SARS. And every representative taxpayer of any person referred to above is required to submit a return. Alright, so now that we know who is required to submit a return, let's see if there's any exclusions who are not required to submit a return. Alright, so if we're a natural person or an estate of a deceased person is not required to submit a return in terms of paragraph 2E, X or F, which is those limitations in the previous slides which we discussed, if the gross income of that person consisted solely of gross income described in one or more of the following: remuneration paid or payable from one single source which does not exceed 350,000 Rand and employees' tax has been deducted in terms of the prescribed tables. Now, quite important here is that, and I often see this where a taxpayer has two streams of income. Maybe they've worked mornings only at company A and in the afternoon at company B. Because you've got two sources of income, even if they're both below 350,000 Rand, you are required to submit a return. Very important. So as soon as you've got two streams of income, regardless of whether it exceeds 350,000, you still need to submit a return. Another exception is if you earned interest from a South African source not exceeding 23,800 if you are less than 65 years, 34,500 if you 65 years older than 65 years, or 23,800 with regards to a deceased estate. And the logic behind these exemptions is your interest income. There's an exemption under section 10(1)(I) XV of the Income Tax Act that states that if you're under 65, you are exempted of interest up to 23,800, and if you older than 65, it's 34,500. So if you earn interest in excess that does not exceed these amounts, then you do not need to submit a return. Dividends, and the natural person was a non-resident throughout the 2017 tax year, and any amount that has been received or accrued from a tax-free investment. Alright, thank you for watching this short video on the requirements of submitting the income tax return for 2017. If you have any queries at all, please contact us at admin@loysenconsulting.co.za. And if you have any other specific queries with regards to tax related matters, please feel free to email us, and I'll try and present these videos on a more regular basis, just to keep you guys up to date with regards to the tax challenges that are currently facing taxpayers in South Africa. Alright, like and share this video if you're happy with it, and yeah, I hope to see you guys soon. Cheers.